Good morning, everybody. This is the Life Market Open for December 3rd. It's Thursday and it's Druggy Day, a big day today. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Sorry for the short delay. As always, we'll talk about the recent developments, and there were quite a few. Discuss some charts and levels. We had a few breakouts, some false, some real. Talk about the next 24 hours, especially this event of the ECB, and of course answer your questions. So I see quite a few of you in the chat box, but if you're seeing the video and can't see the chat box, please go to the address here, tlk.io/fxstreet-forex-live-video. I'll be glad to answer your questions about charts, about anything you wish. Okay, so let's begin. Let's begin with what we had yesterday. Okay. Because it was certainly market moving already. Okay, we had UK construction PMI missing expectations, coming out weaker than expected. It was the second consecutive blow, and it eventually triggered a fall in the pound. Okay, so let's first of all look at the pound. This is what we had yesterday from the UK. We had a fall eventually. We had a fall the second time this week under 150. Last time it was a false break. This time it was real. And the chart will load shortly. And eventually we had a fall under 149. Okay. That was because of the miss in the PMI. Okay, the chart loads a bit slowly. Let's move on to other figures. We had Eurozone inflation numbers missing expectations. Okay, they came out at 0.1 month over month. Year over year for the headline figure, which was worse than 0.2 expected, and core inflation came out at only 0.9. It was expected to stand at about 1%, 1.1. Let me just get back to the pound now that we have the chart. This is quite an impressive fall in cable. Okay. Now, I'm always talking about being more bullish about the pound, about the UK economy doing well, about the Bank of England about to raise rates. Well, if data is worse than expected, expectations changed, the facts change. We had quite a huge fall. You see this first dip early in the week under 150, and then the bigger fall even under 149. Currently at 149.25. I see resistance here at 149.50, and real support only way down at 148. Okay, so the pound certainly received a blow. Now, when I talked about inflation figures in the Eurozone, here they are. Here's the miss, 0.1 on the headline, and here it's a 0.9 on core inflation. Remember, we talked about what Draghi said. Draghi said that the strengthening of core inflation has been weakening lately. We didn't really understand what he was talking about because the numbers were different. They showed a strengthening of the strengthening, and now he's vindicated. Okay, we'll talk in depth, of course, about the ECB meeting. In addition, we had yesterday data supporting the US dollar. ADP non-farm payrolls beat with 217,000 plus an upwards revision. Again, let's look at the Forex Street calendar here on Forex Crunch. So 217,000 upwards revision. Good news. It's not always fully correlated, but it certainly moves markets and supports the US dollar. Also, non-farm productivity was okay, and unit labor cost, which is another very indirect measure of inflation, was also positive, better than expected, revised from 1.4 to 1.8. Okay. And then we had a few Fed speakers. We had Janet Yellen, Dennis Lockhart, and Williams all sang the same tune. So let's talk a bit about that more in detail. So Janet Yellen had two appearances yesterday. Indeed, the first one, as we said, was just opening remarks, but then the second one, she gave a full speech, and she said quite a lot. She said basically that she hinted that the liftoff is coming, that the recent figures bolster her confidence about inflation. Remember, the Fed was pleased with employment. So far, slack is diminishing, things like that. But worried about inflation. They wanted to get more confident about inflation, more confident that they'll indeed reach their target. So she yesterday expressed a lot of confidence, okay? And mentioned again that once the rate hike comes, then it'll be gradual. Then we had John Williams and also Dennis Lockhart. Lockhart is more bullish, and he said that okay, December is going to be a historic event, but Williams is more in the center, and he also said that basically a liftoff is coming. They both sang the same tune. Rate hike expectations now stand very stable at about 75% for 50 points, which implies 100% for 75.2. So it's about 100% for 37 points, which is in the middle of the range between 0.25 to 0.50. Now, a rate hike in the United States is more or less already expected. I think, again, it'll be a historic move. It'll boost the US dollar, but only temporarily, okay? But especially when markets will begin focusing about the graduality that next year they will not raise rates in every decision, etc. Okay, let's look at dollar yen. Dollar yen enjoyed this bullishness from the Fed, from Yellen and her colleagues. We've seen a move above 123.60, but then it faded back down. Lots of choppiness around there, but in all, stronger US dollar against the yen, stronger US dollar against the pound because of the disappointing figures in the UK, but also because of what Yellen said. Okay, so this is all, of course, supportive. One currency that stood out, that didn't surrender to the dollar strength, is the Canadian dollar, because yesterday we had the Bank of Canada making its decision, no change in rates. That was as expected, but they did sound relatively upbeat on the economy, upbeat on US growth, which means more demand for Canadian products, not so worried about oil, and in general, business as usual. Indeed, inflation figures have been okay. Growth was a bit disappointing this week, but not terrible. And we have employment data tomorrow in Canada. We also have the OPEC meeting. Before we talk about that, Canadian dollar in general liked what it heard from the Bank of Canada. And it's important to remember that if the United States is doing better, that means there's and even a rate hike in the United States. It means good news for Canada, more demand for Canadian goods. So it's the Canadian dollar stood out. Okay, 132.80 is support, 133.70 is weak resistance, at 134.60 is high resistance, the 11-year high. Okay, for dollar yen, I forgot to mention levels. 123.60 remains resistance, 123.20, and real support at 122.20. Okay, so lots of events yesterday. Let's continue. During the night, we had figures from Australia and from China. They came out a bit disappointing. So trade balance in Australia was not convincing, not good enough. We have it right. Yeah. Right here. Trade balance came out at minus 3 million. Okay, so it was a bit disappointing. And Chinese services PMI dropped from 52 to 51.2. So the Australian dollar, which yesterday got a nice boost from GDP and earlier received a boost from the RBA that was not that worried. It doesn't manage to make its way higher. What we can say is that its technical behavior is excellent. 72.80 is a clear separator of ranges. We've seen the pair reach higher to 73.40, and then sort of it's a bit pressure to the downside, but it's holding on to support. Okay, the Kiwi dollar yesterday, earlier this week, we had a rise in the price of milk, 3.6%, the first rise after 3 falls. This keeps the New Zealand dollar relatively bid, so it's 66.55 at the moment. 66 is support, 67 resistance. Okay, so we're seeing the stronger dollar, especially against the majors, the euro, the pound, and the yen. Less against the Aussie, less against the Kiwi, and the Canadian dollar stands out with some strength. Okay, now another development we had yesterday is came from the ECB. Okay, towards today's big decision, which we'll talk about more in depth very soon. We heard from Bloomberg. They said that the staff projections from the ECB regarding inflation will not be changed very much. Okay, so we talked about here Eurozone inflation missing, including core inflation, but the projections for the future, the ECB has fresh staff estimations, projections every 3 months. So these are not expected to change. So inflation for 2016 is expected to, the forecasts are expected to change from 1.7 to 1.6 according to this Bloomberg report. And this means less motivation to act because the ECB needs to work according to inflation expectations, not only current inflation. Okay, so this is euro dollar. This is what we had yesterday. Let's reach the main dish. Okay, we had euro dollar falling yesterday on inflation figures, weak ones, and then extending the falls on what Yellen said. It reached 105.50. Another small extension to the downside, inching closer to that support line of April of 105.30. But then quite quickly afterwards, these rumors, these reports from Bloomberg sent euro dollar back higher, because if the projections from the ECB staff are more bullish, not so bearish, that means less QE, less money printing, and lower cut in the deposit rate. Okay, so this sent the pair once again to this 106.30 line. All in all, we had lots of choppiness, a little bit of an extension of ranges, a bit more to the downside and beforehand a bit more to the upside. But I see these levels as maintained, 105.60 and 106.30, okay? Ahead of the big decision. Now, I think it's just part of the game, okay? Let's talk about the ECB. So these are the recent developments in general regarding the ECB. First of all, as I said, Draghi was vindicated on inflation. Inflation came out worse than expected, including core inflation, okay? In the past, I mentioned this many times, Draghi underpromised and over-delivered, okay? So in this context, I'll remind you of what happened in January. In January, the ECB talked about, rumors came out in Reuters, Bloomberg, everywhere, talking about printing 40 to 50 billion euros per month on buying bonds. And eventually, the outcome was 60 billion. And they were talking about a program with a total of 500 to 750 billion. The outcome was over 1 trillion, 1.14 trillion. Okay, so under promising or under leaking weak expectations, low expectations, and eventually over delivering in order to have a bigger market impact. A weaker euro, which helps inflation and exports, and also support for European stock markets, and a message to investors: we have your back, money is cheap, come and invest in the Eurozone, help me pick up inflation, okay? In addition, the worries about the deflationary cycle are very serious, okay? What happens in deflation? People expect prices to fall, so they don't buy, okay? For a good example can be Black Friday. Okay, you're expecting, you're in the United States and you expect someone to sell you a product with a discount on Black Friday, so you don't buy beforehand, okay? And that's a temporary delay of a buy. But if all the time prices are falling, then you'll wait even more. And the factory that produces the product, or the importer, never mind, they don't bring it to the market because they expect less sales, and then they fire people, and these people have less money in their pocket, so they buy less stuff. And this is kind of a vicious cycle. This is more or less what happened in Japan the second lost decade. So there is a genuine fear in the Eurozone that that's what's happening, because this low inflation is here with us for a long time, okay? In addition, the ECB is the only game in town, okay? We have 19 governments, 19 countries in the Eurozone. We've seen their inability to act together on the refugees, inability to act together on Greece. The continent is not holding well together. So the only really powerful institution that can move the economy is the European Central Bank. And they feel a need to act, to do whatever it takes, as Draghi always says. So what will Draghi do? Okay. Yeah. We have this slide right here. We're expecting, I would say, four things to watch, okay? Here it's numbered, okay? First thing we have at 12:45 GMT is the decision about the deposit rate, okay? The interest rates. We first have an announcement on the rates and then the press conference. So currently it stands at 0.20, minus 0.20, a negative rate. That means that commercial banks that park money with the ECB are punished for keeping their money. They pay interest rate, okay? Expectations are for a cut to minus 0.20, but some expect minus 0.40. And according to the rumors by Reuters last week, we could have a two-tiered approach. We could have retail banks paying less in interest rate to the ECB and wholesale banks paying more. That means that this is supposed to encourage investment and not just hit savers, okay? So I'm not sure it'll happen, and I'm not sure about the impact of this two-tier approach. Anyway, the headline, negative deposit rate. If it's minus 0.30, it's more or less as expected. Minus 0.40, that's already a bigger impact, and I cannot rule out even a cut to 0.50, okay? That will be a really big blow. Lower chance, but lower chance, once it materializes, it has a bigger impact, okay? Yeah, I see the question about EU manufacturing, malfunctioning. Yeah, sorry. Yeah, indeed. It's a comment. Anyway, this is the first event. This is the first release. Usually, when they are going to announce further measures, like they did in January and also beforehand, they will say, okay, this is the new interest rate, and we're going to announce more measures in the press conference. So that could also have an impact, okay? But if we have only a small cut of the deposit rate and no cut, and even if they say we're going to talk about more things, it'll be relatively euro positive, okay? But if they cut it to 40, and in addition, it'll be compounded by this announcement, we're going to announce more, it'll have a strong impact. This is also an opportunity to say, come to FX Street and watch our live coverage. Valeria Bidnerick, Dale Pinkert, Mauricio Carrillo, and myself will be covering the event, okay? So first of all, we have the announcement itself, and then we have the press conference at 1:30 GMT. QE. Currently, the ECB buys 60 billion per month. That's what it announced back in January. Expectations stand on 70 and even 80. The median is 75 billion. Okay, that's a significant increase. I expect the ECB to match these numbers, not to go beyond. Why? Because there's lots of political objection to printing more money. It's monetary financing. The Germans are against that. That's a path of more resistance, while a deposit rate is the path of least resistance, okay? So that's why I expect more action on the deposit rate and less on QE. In addition, we had talked that the ECB could have trouble in finding what to buy, what bonds to buy. But this could be easily solved by lowering the negative deposit rate, because the ECB buys bonds with yields limited to the negative deposit rate, okay? But if it lowers its own deposit rate, it has a full universe, a wider range of bonds to buy, okay? So this is the second important thing to watch. Third thing is the length of QE. It's currently until September 2016. It'll probably be extended to somewhere in 2017. It can also be unlimited, okay? You'll see, we'll let you know when we want to stop the program, okay? It will have, of course, a bigger impact, but talk is cheaper, okay? Because when to end the program, it's already only 9 months in the future, and it'll be extended beyond that. That remains futuristic, okay? What the ECB will do next month in terms of bond buying, or what the interest rate will be, is much, much more important, okay? And the last thing, but certainly not least, what's next? Is it a one and done? Is Draghi done or not? That means after, let's say we have a scenario in which the ECB doesn't announce too much, only 10 basis points cut and only 10 billion more, okay? Sort of the more cautious end of the options, okay? But then it also tells us that this is only the first step. In January, we're going to do more. In March, even more, and things like that. That's certainly euro negative, okay? So in this case, or an initial rise in the euro because of less action, but promise to do more very soon, not in September 2016, not in 2017, but in the next meeting or next or in the following one in March, when they have new forecasts, that can be really damaging to the euro. Okay, so that's also something to watch out, because if the ECB announces a few things and then said, okay, we're over for the next year or so, or that's it for now, like they said, interest rates have reached a lower bound, then it's compounded with less action, it could allow the euro to rise. My bet is that the ECB will do more than it's expected, especially on the negative deposit rate, and that the euro will fall. My personal bet is that it'll fall below the 104.60 level, which seems quite far from now. No, not that far, 120 pips, but this is the 12-year low, because Draghi will over-deliver after under-promising. Of course, this is not trading advice. This is only my speculation. If they don't do enough and don't promise to do more, especially don't do enough now, then we could have a big bounce to the upside. In any case, the levels to watch are 105.60, 105.30, 104.60. Beyond this line, if we have a huge fall, which cannot be ruled out, 103 and 102.50, lines mentioned by Valeria. So this is the April low here of 104.60 and 105.30, and the March low of 104.60. On the upside, if the ECB doesn't deliver, always a possibility, 106.30, 107.10, 108.30, which is a very strong line, and of course 110, a very round number. You can never know with the ECB, but my tendency, as I said, is to the downside. Okay, I see here a few questions from Alexei. Let's take the few questions and cover other events for today. I've spoken quite a lot. Hello, Yohay, as always, having some point of view, talking about technical view, it seems to me that a kind of advanced pattern is even forming that even follows the fundamentals as well. Can be a Gartley pattern, I think, is just an observation. What I want to share, if correct, of course, otherwise it was worth trying. I mean, bearish Gartley, not confirmed yet, since it can also be butterfly. As I observe, we have to wait until the segment is closed. Yeah, that's right. We have to, everything now depends on Draghi. And in general, if you want to Alexei and to everybody else, if you want to share a chart, just put a link to the image on the chat here, and I'll be glad to comment about that. Okay. So anyway, as I mentioned many times, I focus on fundamental analysis more than technical analysis. But so I look more at support and resistance, but I'll be glad to look at the Gartley pattern you mentioned. Okay. More events for today. This isn't the only event. Okay. This is the main event of the weekend. Maybe not the month, because we have the ECB, but anyway. What else do we have today on the agenda? So after the show at 9:30 GMT, we have the UK Services PMI, the last and most important purchasing managers index for the UK. Remember, the last two were disappointing. They contributed heavily to the collapse of the pound. So this is the last one, and it's the biggest sector. It's not only financial services, also other services. Anyway, it's expected to fall to, where would we have it? Right here. No, sorry, expected to tick up just a bit, more or less the same, 54.9 to 55 points, okay? So this is, if we have a bounce here, we could see a rise above expectations, because it's the most important sector, because the pound may be a bit oversold. We could perhaps have a bounce from these kind of low levels. 104, 149.50 is the first level to watch, then 150 and 150.60. Okay, to the downside we have 149, weak support, and 148, much stronger support if we have a third consecutive disappointment on that. Perhaps before that we also have some PMIs also from the old continent. From Spain, we had it before. Why don't I see it here? It came out a bit better than expected, 56.7. And Italy, well, it'll come towards the end of the show. Anyway, these are first figures for Spain and Italy, the fourth and third countries, and then final figures for France and Germany. And these are services, not manufacturing. For the Eurozone, it's a bit less important. And of course, all eyes are on the ECB, so we'll have the headlines coming out, but remember, today's Ruggy Day, okay? At 10 GMT, we have Eurozone retail sales, an important figure in general, but today less important because of Draghi. Expectations are for a rise of 2.7 year over year after 2.9 last time. I think it might come even worse, but remember, it's Draghi Day. Okay, and then 12:45 GMT ECB decision and 1:30 Draghi show. ECB's press conference, it usually lasts an hour. If I'm not mistaken, we will start our live coverage at 12:30 GMT, and we'll see when it ends. And in addition to the ECB, to the main event today, we have US jobless claims at the same time as Draghi begins speaking, but it's not as important as the other figures we had today. We had regarding the non-farm payrolls such as ADP and ISM manufacturing PMI. What we do have as another important hint is the ISM non-manufacturing PMI, the services sector in the United States, which is huge, like in the UK. And here we're expecting where is that figure? Yeah, last time it was really excellent, 59.1. Now we're expecting a slide to 58. Still strong growth. We have also this market figure, but remember the ISM is more important. We have factory orders from the US. The most important thing in the release today is the ISM non-manufacturing PMI and the employment component, okay? And of course, we have Janet Yellen testifying at the same time. It's still very important because it's a statement to Congress and she'll be asked a lot of questions. But I think she said most of the things already yesterday. So we're expecting her to give perhaps another even thicker hint, maybe more along the lines of John Williams and Dennis Lockhart yesterday about the rate hike. There are actually two messages. First, we're going to raise rates in 2 weeks. Secondly, afterwards, it's going to be gradual. And confidence about inflation is important. Confidence about jobs is important. Remember, tomorrow we have the non-farm payrolls. So we might get a hint from her on the NFP. So we might get a hint from her, and we also get hints from the data. ADP was positive. The employment component in the ISM manufacturing PMI was positive despite a negative figure, a contractionary figure in the manufacturing PMI. Today we have jobless claims, less important, and the ISM non-manufacturing PMI, very important. Okay, so because of Draghi, the non-farm payrolls and the Yellen are a bit sort of second in line today, but they're still very, very, very important events. Hard to underestimate them. Okay, and then at night we have Australian retail sales, and early tomorrow German factory orders. Usually an important figure, but markets tomorrow morning will be digesting Draghi. Okay, so these are the main events. I see we have more questions. Jam asks, how would you trade the ECB? Would you take a straddle trade, then just in case ECB doesn't deliver, let's say go above 106.60 and sell off below support at 105.50. What do you guys think? What I think about that, I don't know about that kind of strategy. I think you should trade with care. You should wait for the news before acting. One thing I might say is that if the ECB doesn't deliver much at the rate decision at 12:45 GMT, it could boost the euro, but this could be temporary because we could have more QE and we could have more promises for acting more in the future. So this could be a sell opportunity. In any case, these levels 106.60, 105.50, we could see the pair go through both these levels because this is a huge event. Tension is extremely high. Positioning is currently extreme, but it can vanish in a moment, and we could have very low liquidity. So you could have extreme choppy moves to both directions. Okay, so anyway, trade with care, less leverage, smaller sums, and caution in general. Sorry, I don't have an advanced tools for drawing the chart. You can see the M15 time frame, where segment A starts the swing high of 136 and low. Okay, let's try to look at the chart. Anyway, trading the ECB is dangerous. In general, ECB, NFP, wait for the news before acting. Okay, 15-minute chart. What I see here, I see this range you're talking about. I see a lot of choppiness, and we'll have even more extreme moves around the release. Okay. Anyway, if that's what I see currently. After these rumors yesterday boosted the pair, we're seeing it grind lower. Remember, it's ignoring the Spanish services PMI, ignoring other news because all eyes are Draghi. Now, the big question again here is this priced in or not? Okay, we've seen since October, we almost touched 115 on euro dollar, and then it fell all the way to the levels we're seeing now. Okay, so nearly 1,000 pips. It's also due to the strengthening of the dollar, higher expectations for the Fed. These things also happened in late October and also in November, so it's not only the euro side. But still, euro fell also because of its own problems, because the ECB is determined to drag the euro lower because of Draghi's vigilance. Remember, he used the word vigilance in his previous ECB meeting to talk about further action. If he says vigilance today about an action in January or March, it can also be devastating for the euro. So is it priced in or not? I think, again, under-promising, over-delivering, that could lead to a further fall in euro dollar. But many analysts think it's a buy the rumor, sell the fact. So if he delivers only as expected, we could see the euro rising, okay? Because expectations are very high, so he'll have to make a huge effort to exceed those expectations. Okay, question I see here about Aussie against the franc. I asked this question also earlier this week. Let's see how things developed. Interesting, isn't it? 74.97. We've seen it rise from the lows. Found support here at 74.23. Why did I mark this line? I don't know, but So very nice technical behavior. Thanks for the question again. Aussie Swiss. We've seen it here reach resistance at this level and then bounce. When it fell down from the highs, it bounced off. Currently rising again above 74, almost 75. I would say that the next resistance line is right here at 75.40. You're asking, showed some topping signs on the daily chart, but today is grinding back higher again. I am bullish on this pair, and the reason is, first of all, we had positive data from Australia, not tonight because of the trade balance, but in general, strong GDP, RBA seems relaxed, chill, no worries, these kinds of words from the Reserve Bank of Australia. And also China is doing okay, especially the manufacturing sector, which we had figures for early this week. So Australian dollar is doing well. Of course, if we have more hawkish comments from Yellen and the strong NFP, we could see the Australian dollar fall against the US dollar. Sure, because the US dollar is really strong. But Australian dollar in general, if you rank all currencies, it's certainly not the weakest one. Okay, it's one of the stronger ones. And what's going on with the Swiss franc, the other side of this this nice chart? So the Swiss franc is moving in tandem with the euro. Okay, because the Swiss National Bank wants a weak franc against the euro. It preempted the January meeting of the ECB by removing the peg because it couldn't hold it anymore. And it's preempting this meeting with more intervention, I believe. It's not something I know for a fact, but with the weakening of the euro, the Swiss franc weakens as well. So now the focus is on Draghi, okay? On the ECB, on the euro, a currency that doesn't appear on this chart, all right? Because if Draghi delivers, that means a weaker euro, a weaker Swiss franc, and a nice rise in this pair, maybe towards resistance over there at 75.40. If Draghi disappoints, only meets expectations, and expectations are huge, then we could see the pair fall easily back down to support, okay? So if you want guidance for this pair, look beyond this pair to Mario Draghi, to the ECB, okay? And if we already mentioned the correlation, the Swiss franc, let's look at Euro Swiss. Very stable in range. Okay, the euro did fall, so the Swiss franc did fall, but it doesn't fall below the support line of 107.60. Really strong support. Yes, it also doesn't rise too much. 109.40 has been resistance, but in general, we're seeing these sort of dollar Swiss being a reflection of euro dollar, a mirror image, if you wish. So yeah, we're seeing it off the highs of 103.30, and but moving once again towards resistance at 102.50. If Draghi delivers, this pair could shoot towards 105. If Draghi disappoints, maybe fall towards parity. Okay, so also here in dollar Swiss, the key for today is more the euro, more Draghi than the Swiss franc. Of course, also the dollar plays a significant role with Janet Yellen and with the ISM manufacturing PMI and other figures over there. Okay, let's cover some more charts. And if you have more questions, I'll be glad to answer. Euro pound, quite a nice rise because of the collapse of the British pound. This collapse under 150, which was triggered by the disappointing construction PMI and strengthened the US dollar, and exacerbated probably by stop loss points. Currently 70.80, 71.40 is resistance, 70.40 is support, further support at 69.80. Two tests today for this pair, the services PMI just after the show, and of course Draghi. Okay, Euro Yen moving a bit higher because of those rumors yesterday. Found support over there at 129.70 earlier in the week. Resistance at 131.50. The yen is less active today. It's more about Draghi and of course Yellen. Pound yen, the collapse of the pound made it finally fall below 184.30 and reach the next support over there just under 184. I would say 183, yeah, 87, 183.90. Since then, we're seeing a bounce back above this level, some recovery in the pound, some weakness in the yen. Big event for today is the services PMI quite soon. I see another question about Aussie against the yen. Is oversold? Does it go down? Aussie yen. This was the classic carry trade before the crisis. And now let's look at the chart. Well, no, I have the wrong pair, sorry. Here we go. That's Aussie yen, right? 90.43, quite a nice move to the upside. Strengthened the Australian dollar, some weakness in the Japanese yen. We don't have anything in particular for these two specific pairs, but I see the Aussie as stronger than the yen. The yen a bit more vulnerable. Watch out for dollar yen at 123.60, and if we have a break above that towards 125, you could see another also move in the Aussie against the yen. Aussie is stronger, yen is weaker, so there's room for the upside. Yeah, further level as well. It's currently close to resistance over there at 90.50. Support here at 89.40, and further support, I would say, right here at 87.9. Well, could say 88, right? More or less 88. Very nice support over there. So these are sort of the levels to watch on this currency pair. Interesting cross. In general, my tendency, as you can see, is more positive towards the Aussie. Another question from Jax. Pound dollar was sort of exaggerated drop. No, fundamentals were not that bad. Well, in general, fundamentals are good for the British economy, but in the past few days, fundamentals were bad. The weak construction PMI, construction was the strongest sector in the UK, and it disappointed. And PMIs are forward-looking indices, so they're so that was negative. And also, manufacturing PMI, usually the weakest link in the UK economy, it jumped last month, giving some hope, and now it fell back. So it showed that the rise in October was a one-off. That was another disappointment. Okay, so these falls in the PMI sort of are a compound. They add to the dovishness of the Bank of England and strengthen the dovish case. I also think the situation is not so bad. The services sector, we'll hear today, is the services sector the largest and most important one, and the strongest at the moment after the fall of construction. If it remains strong, I think we could have a very, very nice bounce. But if it isn't, if it also falls and disappoints, it sort of draws a disappointing picture. Okay. Question from Jim. How do you see Euro odd? It's been on a clear downtrend for some time now. I see it dropping more than Euro dollar if Draghi delivers. More than Euro dollar depends also on Yellen, because we have also events related to the US dollar. So yeah, if Draghi delivers, Euro Aussie certainly falls, because the Aussie is in general stronger and the Euro is weaker. We'll have to wait and see. Anyway, this is also another nice Aussie dollar chart, because look at these levels, how well they work, these ranges. Not perfect, of course, but yeah, we've seen the pair fall under 199, further support 198, and then 197.40, I would say. Let's put the line here. 197.30. In case Draghi delivers and oh, sorry, I'm looking at the wrong currency pair. Yeah, sorry for the confusion. Anyway, was looking at pound CAD. Also a pair that we had questions about. Euro, Australian dollar. Okay, sorry. Now I have the correct chart. Quite a nice downtrend also here. Another Aussie pair that has relatively nice technical behavior. 144.40 is the current level, reaching down to the lows. 145.75 is resistance. Very clear separator of ranges. Support here, resistance now. Above this level, significant resistance, 147.60. As you can see, it worked sort of for several days as resistance. Let's draw some support here. Yeah, 144 is the next level to watch. Regarding Yeah, more than euro dollar. Yeah, well, if we have a strengthening of the dollar following good news from the United States and the ISM non-manufacturing PMI, and of course Yelen's speech. Yeah, thanks for the comment. There's some delay between the time I talk and the chat. So anyway, yeah, I made a mistake there, and so we got to look also at pound CAD. And anyway, what I want to say is regarding if we have a strengthening of the dollar, we can have euro dollar moving more, and Draghi delivers. Of course, we have euro dollar falling more than euro odd. But if we have more of the same or some mediocre news from the United States, which is also a bit too common, I mean, the exceptions are the strong figures now, then yeah, euro odd could fall more yet again in case that Draghi delivers. So sorry for that mistake there on pound CAD. Lots of interesting charts today, thanks to your questions. Lots of movements in markets and pound, the Aussie going in separate directions. Canadian dollar. In general, we're seeing more commodity currencies showing more strength, more optimism than majors such as the yen, the pound, and of course the euro. Okay. Any more questions? Let's take another look at euro dollar. Choppy in range, leaning towards the downside, the dark side if you wish. Star Wars is coming. 105.80. I still see 105.60 as support, 106.30 as resistance, but we'll see breakouts perhaps in both directions during the ECB event because of the uncertainty, the choppiness, and the lack of liquidity. Okay. Okay, it's been a bit long. Let's get closer to the wrap up of the show, and let's look again at, perhaps we have the figures from Italy. Not that important, but no, I don't know why it's not updated. Anyway, another question, an observation from Alexei. Pound yen seems to be a bullish crab in M15 and even in H1, starting at XA 184.26 from bullish. I have the right currency pair. It's the pound yen. And 15 minutes. Crab. I'm not sure what crab is. If you don't know what crab is. Anyway, it's I would stick to services PMI fundamentals here. Yeah. In general, I think, yeah, British economy is not doing that bad despite the figures yesterday, but I may be wrong. Data changes. Okay. No surprise in the Italian PMI, 53.4 vs 55 consensus. Thanks, Sinatra. That's a small disappointment, but not really market moving because of the ECB, of course. Jumped over a question here. Unrelated question to market. Is it possible to reach you somewhere later in the day? Not only today, in some chat room like here, for example. Well, today I'll be covering the ECB event with Valeria, Dale, and Mauricio on FX Street. So, and will also be available in the chat. And you have on my website on Forex Crunch, you can have the details and a bit of self-promotion. I have a page on Forex Crunch with all the ECB-related articles, what Goldman thinks, what other banks thinks, my preview, of course, the latest news, the breaking events. So you're welcome to follow Forex Crunch. I'll just put out that single page of self-promotion, and from there you have everything you wish. And also my contact details are on the website, so you can get all that and contact me directly. But for today, please follow the. So here it is. I just put it on the chat. For today, just you're welcome to join us all, and the coverage. The coverage is expected to begin, if I'm not mistaken, at 12:30 GMT. That means 15 minutes before the ECB announcement, and that's but don't worry, the announcement will be on fx3.com, also on Forex Crunch. Follow us, of course, on Twitter. Okay. Let's say, sorry, I cannot show the chart. Maybe in the near future. I just want to confirm the fundamentals and share my humble knowledge. First of all, you're of course welcome to share and ask questions. Don't be shy. I'm very grateful for your questions and questions from everybody. And yeah, my fundamentals still point to upside in pound yen, but that view is a bit shaken after the recent figures that we've seen this week regarding the UK economy. Let's see the most important figure this week for the UK economy, which is the services PMI. Okay, so it's time for the wrap up. It's been a long show today because we have a huge event. I assume that also tomorrow's show will be large. Okay, so this is the wrap up for the live market open for December 3rd. It's Thursday and it's Draghi Day. The ECB finally delivers its decision, which is huge. So let's begin with that. We had yesterday some news regarding that. We had Draghi vindicated on inflation. Inflation came out weaker than expected, including core inflation, which Draghi mentioned. More background: in the past, he underpromised and over-delivered. That's why I personally think he'll over-deliver once again. Expectations are high, and I believe he'll meet them and hit the euro hard, but that's my opinion. If he doesn't deliver and expectations are high and just even delivers the minimum, the euro could jump back up. I believe there are real worries about deflation and Japanification, this debt deflation cycle. And currently the ECB is the only game in town. Things to watch. First of all, we have the ECB decision at 12:45, and then we'll know about the interest rates. Most importantly, negative deposit rate. Currently it's 0.20, negative. Expected minus 0.30, some expect minus 0.40. I would say that also minus 0.50 is an option. There's a chance that we'll have a two-tier negative deposit rate, one for retail and one for wholesale banks. Not that critical, but the negative deposit rate is the first big impact. Then at 1:30 we'll have, in the same announcement, we'll probably hear from the ECB that more policy measures will be announced at the press conference. Press conference, 1:30 GMT. QE, the monthly buys of the ECB. ECB prints currently 60 billion a month. Expectations are 70 and also 80 billion. 70 is sort of the minimum. 80 is the maximum. He can, of course, go beyond or not do anything. I think he'll meet expectations over there. These are the two things to watch. QE length, currently September 2016, expected to be enhanced to 2017 or even unlimited. But that's more talk than action. But more important talk is what's next. Is Draghi done or not? If he announces measures now and says that in March or in January, in the next meetings, he'll announce even more measures, that'll be devastating. But if he'll send us the message that that's it, it'll of course be somewhat euro positive. Most probably he'll say that the ECB will examine the situation, it will be data dependent, things like that. But if he says we'll act with vigilance is a nice word, then we can expect more falls. Okay, so that's levels for euro dollar. Currently leaning towards the downside, 105.60 support, 106.30 resistance. Bigger levels to watch, 107.10, 108.30. On the downside, 105.30 and 104.60, which is the 12-year low. Again, my tendency, and I can be right and I can be wrong, is that we'll have Draghi beating expectations. Apart from that, that's the main dish for today. But we also have UK services PMI at 9:30, critical test for the pound now that it's fallen because of weak data. It's the most important sector. Pound currently 149.20, resistance 149.50, 150, 150.60, support, real support only at 148. We also have Eurozone retail sales. We have US jobless claims at 130, and at 3 GMT, more or less after half an hour after Draghi finishes talking, we'll have Janet Yellen testifying. She already spoke yesterday. She said, basically set the ground for rate hike in December and then gradual moves afterwards. Okay, so we'll have, let's see if she gives us more hints or not. Follow what she says about confidence on inflation and situation of the jobs market, especially towards the non-farm payrolls tomorrow. Maybe she'll release a hint. And speaking about NFP hints, we have the ISM non-manufacturing PMI also at 3 GMT at exactly the same time, and that's expected. It was excellent last time, expected to drop a bit. Watch out for the employment component for another hint. Yesterday we had ADP NFP coming above expectations. That means higher expectations for tomorrow's non-farm payrolls. Okay, and at night we have Australian retail sales and German factory orders. Just to talk about a few more things we had yesterday. Another miss in the UK figure, we talked about that. Eurozone inflation missed, ADP. Not only Yellen, also her colleagues also talked about historic decision in December, that was Lockhart, and basically they're about to move. Bank of Canada, business as usual. Despite the fall in oil prices, they're optimistic. That's why the Canadian dollar is stronger. Australian dollar is also stable despite some disappointing figures from Australia and from China. Okay, let's just cover quickly those charts. Aussie dollar CAD 133.70, 134.60 resistance, support 132.80, 132.40. Aussie dollar 72.80 is the clear line of support, very clear separator of ranges. Resistance, I would say 73.60 and 74. Kiwi dollar encouraged from milk prices 66.60. It's between the round numbers of 66 and 67. Okay, so I hope I didn't miss anything. Talked a lot because there are really so many events. Today is D-Day, Draghi Day. That's it for the wrap. I see more questions. I'll answer them quickly. Yeah, coverage at 1:30 GMT. That is, sorry, 1:30 CET, European Central Times. That means 12:30 GMT. Keep inside all euro-related pairs, of course. I think Draghi will sit and wait. Yeah, so that's also an. I don't think he'll sit and wait, but perhaps not meet expectations. That's an option. In this case, the euro will jump. 107.10, 108.30, and 110 are levels to watch. Is the euro experiment nearing its end? I'll ask you this after we see the damage Draghi does. Yeah, that's a long conversation. I don't think the euro experiment is nearing an end, but because there's too much to lose. Anyway, yeah, thank you for the kind words. I guess that's it for today. Remember, a trade after the news, not before the news. I expressed here my tendency, but it's not trading advice. Anyway, wish everybody a safe and successful day. Join our coverage, Valeria, Dale, and Mauricio, and myself at 12:30 GMT, and I'll be here on the morning show as usual tomorrow morning. So that's it for today. A long show, a big day, and that's it. Wish everybody success and see you tomorrow. Bye-bye.